Good afternoon, traders and investors. Will back here with another one, coming to you with a Sunday night video, guys. And it's that time of the week again where we go over the top 5 options plays for the upcoming week. Now, keep in mind, all of these options plays are going to be for selling options, more specifically for selling put options as part of the larger wheel strategy that we like to run on the channel. It is a very easy strategy to run, guys, whether you're a beginner, intermediate, or even advanced investor, and provides some very decent income to complement any portfolio or just used as a strategy in general. Take a look here in terms of what we've done with the strategy this year. You can see that we are currently up year to date 72%, which is beating out the S&P 500 by a factor of almost 2.5 to 1. And we're even outpacing the NASDAQ here by a factor of 2 to 1 with the 72 versus the NASDAQ's 36% gain. Very easy strategy to run, guys. And this is the second year that I've been running it publicly on the channel. Last year's gains in 2023 were 77%. You guys can even go check the videos from last December to confirm that as well. So in terms of today's video, what we're going to tackle together, number one, setting the tone for the week. What do we have in terms of macroeconomic news events and also earnings to pay special attention to? Thereafter, we're going to get into a few of these strategy rules that I like to look for when I'm looking to sell put options. And then, of course, we're going to get into the juicy stuff, the top 5 options plays of the week. And of course, as per usual, I have a ton of bonus plays for you guys as well. So a lot to cover in today's video, guys. Let's jump right into the action. So in terms of how we are standing in the indexes right now, we know obviously the bulls are in absolute full control. Weekly uptrends are very nice, and even on the daily we've created a lot of space. However, if we do have a pullback, just keep in mind we have a lot of space for a pullback and a very nice support level down here on the SPY, 586 to 580, and the same thing goes for the QQQs. QQQs a little bit weaker than SPY in terms of recent price action, but a very decent support level. So even if we do come down a little bit hard early on in the week, should be a decent week to be writing some premium just in terms of the support levels below us in the indexes on a weekly basis. Keeping in mind though, guys, this can be somewhat of a volatile week. In terms of the news events that we have, we are going to get the ISM manufacturing data. Now, these data points for manufacturing have been a pain point in the market ever since the month of August. In the month of August, you guys remember what happened, right? On the SPY and QQQs, this was the first bad manufacturing report, followed up by a bad jobs report, and then the Black Monday event with the Japanese carry trade unwinding. So we need to pay special attention how this manufacturing report is going to come in. The consensus is higher than last month, but if this comes in weaker, guys, at like a 46 or even a 45, expect there to be some fairly big red in the markets tomorrow. Thereafter, we have a few important jobs releases this week, which is going to be Tuesday, the JOLTS jobs openings report. Once again, a lot of focus right now on the economy is in terms of jobs, and this is the biggest recession indicator of them all. If this comes in significantly underwhelming, expect the market volatility to come back and expect us to have some decently big red days too. Thereafter, another jobs report, the ADP employment change on the Wednesday session, and on the Friday, we have another huge jobs report, guys, the non-farm payrolls and the unemployment rate. That is going to be the focus of this week. So this week could be a very volatile week in comparison with last week, which was a fairly easy one, you know, a couple days off, no big macroeconomic news events. So this one could be a little bit volatile. So be careful with your strike price selection because you do not know how these data points are going to impact the market. In terms of the earnings, well, although we do have a decent amount of earnings, none, in my opinion, that are going to truly move the market in a big way. Yes, we have a few big ones like Zscaler, Salesforce, Marvell, right? Some names like Chewy, Sentinel-1, Five Below, things like that, Lululemon, UiPath on the Thursday session too, but nothing that's really going to be able to move the market a lot on its own. So we should be fairly good in terms of that respect. So in terms of the market this week, guys, I am still cautiously optimistic, but with an emphasis on cautiously. So in the event we get a little bit of red on a Monday or Tuesday, on the Monday or Tuesday sessions, I will still be writing my put options, but I will be fairly conservative with my strikes just because we know that there's a lot of data coming in later on in the week, culminating with the non-farm payrolls on the Friday session. And if any one of these news releases ends up bad, well, the markets could have a decent little bit of pullback. So please do keep that in mind. Now, in terms of the strategy, guys, what do we look for in terms of looking and shopping for put options? Well, quite specifically, guys, if you have not seen, I'm going to fly through these in today's video, but if you haven't seen, I have a 30-minute full strategy video down below in the description. So if you haven't seen that longer version where I go over how I pick my stocks, how I pick my strikes, and just the strategy explained in more of a detailed format, take a look at the link down below, because as of right now, we're going to kind of fly through these. So at a first glance here, what you want to do to go shopping for put options, number one, is you want to build a watch list of your favorite companies that you would not mind owning. Now, keep in mind, what I do first thing Monday and Tuesday is I filter by red right here, and I am most interested in the names that have come down. That'll make sense when we go through our next few items here. Now, the rule number one is solid companies only, guys. Please, please, please never write put options on a company you do not want to own. Keyword, you need to want to own the company in the event you get assigned, right? If you get trapped in a company like, let's say a company like Etsy, where you're just playing it for the premium and it just goes down and down and down and down, and you're wondering what you're doing in the trade because you have no conviction in the stock, well, it's not going to be a fun experience for you. So keep it to only high quality companies. Number two, we want to be targeting companies in a monthly uptrend or a long-term range. That ensures that the long-term bulls are at our backs, and when we're writing these options at support levels, they're going to come to play some defense with us. Now, number three, the company needs to not have any earnings this week. You guys know earnings is a very, very volatile catalyst for a lot of stocks out there, and you could end up with some nasty surprises to the downside. So if you want to avoid any outsized losses, just do not play any stocks that have earnings this week. You will stay in line with the rules of the strategy. Number four, we're going to be looking for setups in terms of writing puts at a support area or an area of breakout retest. I bring out the chart for Autodesk every single time. A big support area is something like down here, right? 5, 6, 7 months worth of support looks good to me. The breakout retest trade is slightly different. That is otherwise known as the trend continuation trade. So take a look at this right here. When you have a range of resistance and range of support, the market's just kind of range bound, right? When you get the break above, breakout, retest, and run, this retest location, retesting prior resistance as current support, usually a very high probability trade. So all of the setups that you'll see me ever show on the channel will be filling one of these two criteria. Now, number five, we want to be writing at or lower than the expected move for our puts. What does that mean? Well, come to this website right here. If you guys don't know what the expected move of a stock is in a given week, you can come to optionsai.com. It's a free tool. You don't need to sign up for an account. Just type it into Google, Options AI Expected Move Calculator, and you'll come directly to this page. The expected move is what Wall Street probabilities are in terms of upside or downside in the stock in a given week. Here you can see I have Google pulled up right now, and the expected move is about 2.2 to the downside. When we are looking to go for short puts, we are looking to write these put options under the expected move to the downside. Once again, it just increases our odds of not being assigned. Thereafter, we want to be writing on a red or flat day. Well, it goes with the above point, right? If we are looking to write a put option below the expected move, guys, right? We need the stock to come down into it to free up even lower strikes below that expected move. Because if we're always looking to write below the expected move and it comes down into there early in the week, usually by the end of the week, you get a little bit of mean reversion to where the price pulls back in within the confines of this range established right here. So that's it for that point right there. The next point is your ROI. We want to be targeting stocks that are paying between, well, not stocks, but strike prices that are targeting between 0.5 and 0.75% in weekly premium. What does that mean? Well, this is your ROI. If I go to the Google options chain right here, let's say I want to write some puts on Google, we are going to be looking if we are respecting our premium minimums in terms of ROI, and that ROI minimum is 0.5% per week. I know a lot of people like to use deltas like 30 delta, 20 delta, 10 delta. The problem with that is when stocks have varying degrees of implied volatility, different ones between different stocks, the deltas are either going to be closer or further away. They're never going to be the same. One way that you can kind of normalize the deltas across all of the different stocks is by using my 0.5% rule. The 0.5% rule in terms of premium encompasses those changes in delta. So you don't really need to do anything else than doing a little bit of mental math. Let's say I wanted to write the 160 puts right here. I want to find at least 0.5%. Now, quick mental math rule is that when you're looking for 0.5%, just look for half of the strike price in cent increments. So if you want me to do the math right here, you'll see that 0.8, let's say half of 160 is 80. So 0.8, right, in cent increments divided by your 160 strike, that is literally exactly 0.5%. So this is a very easy way without knowing delta to go through a ton of different options chains and looking to see, is the price that you're trying to get, is the put strike price, is it giving enough ROI? Here we can see the 160s are not giving the correct ROI. As a matter of fact, you would have to go above the 165s, even towards the 167s to actually unlock that level of premium. So hopefully that makes sense, guys. You don't want to go too close to the stock price above 1% per week because you increase your risk of being assigned by a very large fashion. So this, in my experience running this strategy for the last 6-7 years, this is a sweet spot to where the risk of assignment is relatively low, but you're also getting paid a very decent amount for it. If you're always getting 0.5% per week, guys, times 52, that's a minimum of 26 to 30% per year without any compounding added to that. And that is roughly twice the average yearly performance of the SPY. Now, lastly, we want to be setting a take profit order at 90% of the contract value. This is just for capital efficiency. So let's say I write puts on a Monday morning, and by Tuesday afternoon or Wednesday morning, they're pretty much 90% in profit. Why would I hold the capital exposure all the way to the Friday session to collect the remaining 10%? It does not make sense. You may as well close the position and go shopping for a new trade just to make sure that your capital is being efficiently allocated for decent ROI. Now, in the event we get assigned a stock, right, writing puts is a way to get into a stock. And now if we are into the stock and assigned, we want to then get out of the stock. So we will be writing covered calls. This is a kind of buy limit order under the market, and this will be a sell limit order above the market to get out. So covered calls, we want to be targeting the same ROI minimums, 0.5% to 1% in weekly premium. That is the rule that I follow for ROI. And lastly, we want to be writing at our assigned strike prices or one strike higher. So if I get assigned Google at 165, the following week, I will be writing covered calls at 165. The only time I'll be looking for one strike higher is, let's say I get assigned Google at 165 this Friday. And then the very following week on the Monday, it gaps up to 167, 168, 169. There and only then will I be able to write one strike price higher. But 95% of the time, guys, you'll always see me writing at my assigned strike price. So those are the strategy rules. Hopefully that was cleared. Now, for the top 5 options plays, the juicy stuff, let's get into it. And speaking a lot about Google, Google is actually stock number 1. So the reason that I like this one is, oops, what did I do right there? My bad. So in terms of Google, what we're going to be looking at here, guys, today is just a common factor that Google is in a very nice area of technical support. We've been trading this one a lot on the channel in the most recent weeks, and it is still providing a very juicy opportunity, guys. This lower support range down here, call it about 162 down to 160, is a very sweet spot for Google. Keep in mind also, fundamentally, the company is extremely cheap right now. I don't have it on this chart, but let's pull up GOG. The PEG ratio is only a 1.21, and I know the company's been struggling with headline risk from the Department of Justice and whatnot, but I do still believe that it's a very solid play for weekly put writing. All of the analyst price targets are considerably above the current stock price, and even if you take a look at their growth metrics, EPS and revenue will be expanding very, very well over the next coming years. So this is arguably some of the last chances to be able to pick up Google at these lowered levels. So for that reason, I'm going to be looking to play Google stock. I'm going to be using ticker GOOGL. So the expected move for Google this week is 165.3. So let us go shopping. Can we find anything below that 165 strike? And funny enough, we literally just had this one up on the chart, and you can see right now the 165s for GOGL, the 165s are not paying enough premium. So do we sacrifice and go one strike higher just because it's not paying enough? No, we respect our rules, guys. We want it to be below the expected move and closer to our area of support. I do not mind writing at 165, but I need to get paid adequately for it, guys. So for that reason, we're going to be needing Google to drop a little bit Monday or Tuesday. If Google has a little bit of a drop down here, coming back into the 167s, even 166s, that is of course going to free up the 165 strike. And maybe if it drops even more, or it could free up the 162.5. Quick reminder, you need to see at least 80 cents on the bids here for this trade to be worth it for you. So watch out for that drop on Google early on the Monday or Tuesday session. Now, in the event Google just pulls away from us on the Monday or Tuesday, guys, are we going to chase the stock higher? No, we let the trades come to us, guys. When a trade just runs away from you, all you have to do is look for another trade. We are not in the business of chasing trades. We let the market come to us in our desired support zone. So that is trade number one. Trade number two is going to be a host of different semiconductor names. And I'll give you my favorite one. We're going to run through a couple of them, a couple different ones here. So this one is going to be NVIDIA. So NVIDIA, we know that although they've been a little bit struggling since their earnings, they came out with fantastic numbers. The growth metrics of the company are extremely solid. And this is still one of the more favored semiconductor trades in the market, even though that whole industry has not been doing too well. I've covered it multiple times on the channel. I still do believe NVIDIA is a fairly sure bet at this point in time. That being said, the expected move for the week is about 133.36. with emphasis on the support level down here, 130 to 126, because that is the prior area of previous all-time high support and should be newfound support if the bulls choose to come down into that range as well. So even though the expected move is here, I want to be writing down here in the 130s. So let's go shopping for some NVIDIA and see if we can find anything down there in the lower 130 range for the week. So keeping in mind, guys, if we're looking at the 130s, you'll see there's not enough premium here at all, right? If we're looking for 130, you need to see at least half of this in cent increments. That would be about 65 cents. So where do we have the 65 cent rule? Well, it's about at 132, which is not too bad. That is under the expected move right now. However, if NVIDIA has a little bit of a decline Monday or Tuesday, and we just continue this daily downtrend, it could be an interesting opportunity. If on Monday or Tuesday it drops, that will most likely free up these lower strikes, 131, 130s, for about 60 cents, 65 cents on the bid. That will be a very solid trade. Now, in the event NVIDIA has a 4% down day on the Monday session and we come below, are we still going to write the 133s, guys? No. If it comes down 3-4%, we adjust our targets. If it comes down into 130, 131, then you may be even able to get even lower. Think the 127, 126, 125. So at a first glance, my preferred strikes for NVIDIA this week will be 130 down to 125. And a lot of people ask me on the channel, even though I'm presenting weekly trade opportunities, is it possible to extend these on a longer basis? 2 weeks, 3 weeks, 4 weeks, 5 weeks? Absolutely, guys, and I do it all the time. Just keep in mind, you want to be respecting your minimums. If you're looking for a 4-week for selling put in terms of days to expiration, you want to be still getting at least roughly 0.5% per week. So 4 weeks, 0.5% times 4, you should be getting at least 2% on that monthly put option contract. So that is a trade for NVIDIA. That is trade number 2. And there's a lot of other ones, guys. I won't be going through these each individually, but AMD, big support range, expected move 132.45, would be looking for down here in the mid to low 120s for some short puts on AMD. Same thing for ON Semiconductor. On Semi, this is a very solid company. We've been in this massive area of support. You've seen me play this one so many times in the channel in the past few months. If we get a decline on Semi on the Monday or Tuesday session, look for the mid $60 range, 65, 64, decent trading opportunity there as well. And LRCX, same thing. This whole 72 down to 65, big range of support, prior all-time high, range of resistance, now support range, and the 200 weekly moving average down there too. If you get a decline on LRCX and you can find some good premium down here in the 68 to 65 range, decent trading opportunity for those semiconductor names. So I went through the full recap on NVIDIA, but you guys can also price them out on all these different ones if you enjoy them too. Now, company number 3 for the top 5 options plays is going to be Uber. Uber for a number of reasons. Number 1, the valuation. The valuation down here is 1.2, guys. 1.2 peg for such a solid company. This company is now net margin profitable, no problems there. And additionally, they have a very good forecast for the future. All the analyst price targets are above the current share price for the stock. And look at this EPS growth, and look at this revenue growth as well. Nothing is wrong with the company, but they've been hit a little bit hard recently recently, ever since Tesla had its rally, because they say that the robotaxi network will be competing with Uber's network as well. I think these concerns are very short-sighted because if that competition were to arise, I think we're talking in terms of a question of years out in the future, maybe 3 to 5 years before Uber's network is affected. But I wouldn't be surprised that at first you may even find those Tesla robotaxis on the actual Uber network to begin with. So that being said, short-term headline risk, of course, but decent buying opportunity for us. So very nice level of weekly support down here, guys, talking about roughly 72 down to roughly 68. Very juicy levels for Uber stock. You can see it even better on the daily. This has been support for a very long time, and the 200 daily moving average is there as well. So I am interested in playing Uber. The expected move for the week is 69.83. So let's go shopping together. Can we find any premium on Uber below 69.83? So taking a look right here, you will see we're going to go shopping for the 69s. Unfortunately, guys, is it giving us enough premium? No. Half of 69 rounded up to 70. Half of 70 is roughly 35 cents on the bid. So you do not see 35 cents on this bid right here. So it is not giving us enough ROI. That being said, are we going to get greedy and go for the 70s? No, that is above the expected move ever so slightly, but still above. So we need to wait for Uber to have a red day on a Monday or Tuesday. If we come down here into the lower 71s, even in the 70s, or even high 69s, let's say, that will indeed free up the strikes we are looking for. 69, 68, 67, pretty much 69 down to 66 are my desired strikes. You have to be dynamic. Depending on the size of the move to the downside, you adjust your strike prices lower and lower, provided you are getting the correct amount of ROI. So that is trade number 3, and that is Uber. And now trade number 4, we're going to be taking a look at Elf Beauty. So Elf Beauty as well was the, happy recipient of a short report about a few short weeks ago. And the company was very quick to dispel any concerns around its practices, right? Some of the short report allegations was that the company was misreporting inventory, misreporting as well how much it pays for customs for importing its goods, and kind of misreporting revenue as well. The company the very following day put out a statement and said, these guys don't know anything about our business, and kind of dispelled any of those concerns. That being said, I do believe that Elf Beauty has some very nice tailwinds for the company right now. Number one is pricing power. In an environment where the consumer is stretched on their budgets, they're looking for basically premium quality products at cheaper prices. And that is where Elf Beauty comes in. They offer a whole range of cosmetic products, very high quality products, but at a fraction of the price that you would traditionally find with other legacy companies such as Estee Lauder or L'Oreal. So their business proposition is very good. They have a lot of pricing power, but also their customer retention, guys. When these customers attract people to, when this brand attracts customers to it, usually the customers stay around. So they have a lot of customer loyalty, and they do very, very good with the younger demographics in the market. So this one is a buy for me. In terms of the valuation as well, the valuation is very cheap right now. We did it at about 109. It's not that much further away. It's only about 10% higher, 10-15% higher. The PEG ratio should be only sitting about a 1.8, 1.9. Not too bad for a high growth company. And take a look right here, guys. You know, the analyst price targets, for the most part, the analyst average is 160, and we have nice expanding EPS. We have very nice expanding. Look at this revenue curve in the next few years. Quite massive to say the least. So Elf Beauty also, on a technical basis, we are going for a possible weekly uptrend after the disaster that happened here. Now the first weekly uptrend after we formed a base of support down here closer to the $100. So I will be looking to bid in these lower levels, guys, because I think that Elf Beauty might be on pace to put together a little bit of a run towards our higher area of resistance, roughly 150, 160. So I want to take advantage of this one the whole time that it's down below here. Keeping that in mind, the expected move for the week is 121.26. So let us go shopping for some Elf Beauty Premium and see if we can find anything below that 121 expected move. And Elf Beauty is no secret. They have a lot of premium on these contracts. So we're going to expand the chain a little bit here, and I'll show you guys what I mean, right? So take a look, guys. Where does the 0.5% rule come into play? You can see that even at the 117s, we're getting 65 cents. Even at the 116s, you are getting roughly 60 cents at the midpoint right here. So I would be going with some of these teens strikes, right? Depending on if Elf Beauty comes down on the Monday or Tuesday session, you might be even able to get lower and lower and lower. So the first strikes for me would possibly be 116 down to about 114. But if Elf Beauty comes down, and this one can be volatile, you can have some 4%, 5%, 6% down days. If you get one of those on a Monday or Tuesday session, the strikes, guys, you'll probably even find the 110s and lower. So this one, you have to be dynamic with it. The minimum strike is 116, but if Elf Beauty comes down, I will be going lower and lower and lower and trying to find where I get the best bang for your buck, keeping 0.5% rule in mind, trying to get as low as possible on this options chain, try to get as deep as possible towards this kind of previous resistance level back here, right, which is now going to be acting as support. So that is the trade for Elf Beauty. And once again, that is 116 down to 110, as low as we can possibly get to play the volatility. So that is stock number 4. And now finally, stock number 5 has been one that has been selling off over the last few weeks. No major red flags in terms of the stock, just normal price action in my opinion. This is also a stock that Warren Buffett holds in his Berkshire Hathaway portfolio. Although he has been trimming a little bit, he actually bought all the way back here at the IPO, and he did DCA a little bit back here, but his average cost, guys, is not the best. It's not as if he bought it all the way down here. That being said, the stock is looking very good when you expand into the longer time frame horizon. Nice monthly chart and a very nice weekly chart as well. What we're doing right now, coming back into prior weekly support. All these guys from back here, weekly support, and also the IPO resistance level. So it is a very big level, talking about 12 down to roughly 1150. And the stock is almost coming down into there now and almost into daily oversold conditions. Keep an eye. Whenever this stock comes into daily oversold conditions, it's usually a very decent time to be possibly playing for some bids. So all that kept in mind for new holdings, guys, I'm going to be looking at this week the $12 strike down to 1150. The expected move is 12.06. So let's go shopping on new holdings. And I mean, the financials of this company, guys, are very, very, very solid. Nothing wrong with this company at all. We did the valuation at 13. The PEG ratio is only 0.7. Look how much they're growing revenue and EPS per year. Absolutely fantastic growth metrics right there. In terms of your EPS expansion, look at this EPS expansion, massive expansion there, and revenue. Look at this revenue curve. Going to be looking very pretty for new holdings over the next 3-4 years. So while we have these very nice dip opportunities, I want to be making some plays. That being said, let's go shopping together on new holdings and see what can we possibly find. So when we pull up new holdings, let's go shopping for under 12. So here's the December strikes. As you can see, they are paying 10 cents at the 12 strike, which is indeed below the expected move. However, if new holdings continues their decline into Monday morning, continuing into possible daily oversold conditions, guys, my actual desired strike is the 1150s. If they can give me 7, 8, 9, 10 cents on the 1150s, I would take this trade 100%. As of right now, the 12s are fine. They are below the expected move, and it does give you a decent margin of safety from current price of about roughly 4.5% until the end of the Friday session. However, where it really gets juicy is if they continue dropping here early on into the week, come down into 12, then you might be able to get the 1150. So my preferred strike for this one are the 1150s. They are paying 0.5% right now at 6 cents, but I'd like for this one to get a little bit more juicy, 8, 9, 10 cents, and that would require the stock coming down closer into the 12 level down there. So those are all the top 5 options plays for the week, guys. Hopefully you enjoyed those. And now let's jump into the bonus plays. So some of these bonus plays, it's not that they're not as solid as the top 5. Some of them, however, are a little bit more risky, and or some of them are just not ready yet. The first one is going to be Coca-Cola. We've talked about this one so much on the channel in the last few weeks. Coca-Cola, I like them. If we can come back down here, $63, $62 level, very juicy location. However, keep in mind with Coca-Cola, they don't offer that much premium, guys. You really have to be on top of the strike to get anything. Look for December. The only place they're paying premium right now is 64 strikes for 43 cents. Anything under, there is nothing there. And look at the price of Coca-Cola. We are literally right on top of it. So if I see a decline on Coca-Cola down here, 63, even into the 62s, this zone is where I'm going to be willing to bid because you have to be right on top of it. But Coca-Cola, very easy trade. It's a monthly breakout, retest, and possibly run. So wouldn't be opposed to buying a few shares down here if I get assigned with those short puts. Number 2 is going to be Airbnb. So Airbnb, same concept, guys. I'm not going to be giving you the expected moves and all that stuff. Just going to give you the trade ideas. Airbnb, same concept. If we get a big decline here, I'm looking to play the 127s down to 125s. The true support range is down here at 110. I don't think we're going to get there, however, but I would not mind playing the 127 down to 125 range. I think the bulls are looking good. The valuation is looking good as well. It's just this one has been lagging sector peers, right? Lagging Expedia, lagging Booking Holdings, lagging Marriott, lagging Hilton as well. You guys get the concept, right? So Airbnb has been left behind the competition pretty much. So if it comes down here, I will be willing to buy the dip on Airbnb using short puts. Another one I'm going to be looking at is Enphase. So Enphase got crushed recently, and the valuation of this stock down here at 65 is super cheap, guys. 0.79 peg coming into the support ranges that we previously had in June of 2020. So I do believe that we may have hit a temporary bottom right here. So if we come down back into it, I do believe that although this one is risky, keep in mind, guys, if we're worried about Trump, we have to go back and see what happened when Trump was elected last time. And there you go. Here's the solar ETF. Here's when he got elected. And as you can see, the solar sector did not fall off a cliff to zero, right? It actually did decently when Trump was in office, culminating, of course, in the massive 2020 rally. So I am still a fan of bidding Enphase Solar here, even though the company and the whole sector has been out of favor. And Enphase usually gives some fantastic premiums. You do not need to be too close or aggressive for it, right? Even at 71 right here, look at the amount of premium that you can get on Enphase just because of how volatile the stock has been recently, right? If we pull up Enphase right now, you'll see you can get deep into the $60 location. 65 is your 0.5% rule. That's a decent ways away. So if I get a drop here Monday or Tuesday down 67, 66, 65, maybe even able to write the 60s or the 58s. That's my desired trade on that one. The next one is BITX. So if we want to play Bitcoin here with a little bit of conservative action, we can play short puts using BITX. The reason I like this one is because we can usually get very far away from the current price using BITX as a proxy to Bitcoin. This is the 2 times leverage Bitcoin product, of course. And look how much premium you can find on these contracts. This is why I like them. We do not need to go too close, guys, and play this one aggressively and get seduced by the amount of premium on the chain, right? Very easy to get seduced by the 54s that are paying 2% for a week. The problem with that is it's very close to the current stock. 54 on BITX is 10% away. If Bitcoin drops 5% this week, you will be assigned, and you'll be assigned near the top. So you want to stay a little bit conservative, but still make some very decent income here. So even the $50 strike is decent at 54, and you can go even lower. Look at these. The 46s are paying 28 cents, which is literally better than the 0.5% rule, all the way down even to the 45s. So you can stay very conservative. And even if we're playing 45s on BITX, guys, that will be a decline of Bitcoin of 13% in 1 week. I would not mind buying if BITX came down there, which would be a double 26% to the downside. So no need to play this one extra aggressively. It's just a stock that gives you a lot of margin of safety and still being able to get some very decent premium in the process, which leads me to the next one that I myself took last week. MSTR, same concept, guys. We don't need to get seduced by the massive amounts of premium on MSTR by playing strikes that are just too close to the money. You might look here and say, wow, I can make $1,600 if I play the 350s. Yeah, but the problem with that, guys, is MSTR moves a lot. The 350s are only 9% away, and you guys know MSTR can move 9% in one single day sometimes. So last week, what I did when we had the decline down here is I went super conservative. Look, I got a ton of premium. I went with the 240 puts for this Friday, and I got $3 whole for them, $300, which is above 1% for the week. And look how much margin of safety I have. I have literally 37%, 38% of margin of safety, and I got above my required minimum ROI. So you can still play this one in a very safe aspect. You do not need to go too close and end up getting destroyed, and then you get trapped, and then you get nervous, and the loss accumulates. So just be careful if you're playing these ones, guys. I'm not here to tell you how aggressive or conservative to be. I'm just showing you how I play this one myself. Same concepts for the other stocks that I'm going to show. SMCI, this one as well, has had their host of problems, right? But their earnings, we covered their earnings, guys, and the earnings, as a matter of fact, their earnings were actually quite good. No significant reduction in demand due to the regulatory concerns and filing delays. The relationship with NVIDIA is still strong. That was said by the CEO. Matter of fact, they will be speaking at NVIDIA's keynote event in the month of January. So SMCI, very solid product, guys. Even though they had, the delisting risk, they also had of course, the 10K accounting manipulation risk and everything like that. But they are now all being resolved. These issues are now being resolved. We have to focus on the fact that they do have 70-80% of the liquid cooling market share, and their product is still a very solid product. So all the rest of the noise, guys, I'm pretty sure that a lot of that is now behind us. We have some very decent levels now to be playing off of. 28.50 down to 22. That is my desired location. And same thing with BITX and MSTR. This one has a lot of premium because it has a lot of implied volatility. So if I'm looking to play this one in a conservative fashion, you guys will see I already have an SMCI position for this Friday. I went with the 28s. Look how much premium I got. I got 84 cents. Now that is somewhat aggressive, right? But if you want to play this one a little bit more conservatively and respect the 0.5% rule, look how far you can go, guys. You can go all the way down here to the $22 strike and still get 1 full percent almost. You can even go down here to the 20.5s or the 20s and get 0.5% for the week and play this super conservatively, guys, and have a very wide margin of safety of 37%. So we don't need to play these. These are aggressive stocks, but we don't need to play them in an aggressive fashion. We can end up with a very large margin of safety and still collect some very decent weekly ROI. Same thing for SOXL. SOXL, the 3 times leveraged product for semiconductors, of course. The whole sector has been out of favor, but it has not prevented me from playing short puts. I also have, I don't have any this week, but I'll be writing some probably over the course of the Monday session. So SOXL, same concept, guys. You want to be going as low as possible. No need to play these in an aggressive fashion like some people do. Take a look right here. SOXL, right? It's currently at $28. We're in this big level of support down here, which I haven't labeled, but I guess you guys get the point, right? It's bounced a few times from this location. Look how far below you can get the current share price, right? You get a lot of premium just by going a fairly decent bit amount lower. $24 strike pays 15 cents. That is above the 0.5% rule. And SOXL would need to come down a whole 14%, guys. So you would need the underlying index, the SMH, to come down 5% over the course of this week. That's a big move, right? So that is just how I like to play these leveraged products or these risky plays. Another play idea is Alibaba. Alibaba, we covered them a few weeks ago. They had fantastic earnings, but the China trade has kind of been eroding since the stimulus news and since Trump took office, because of the tariff risk, of course. Pinduoduo, stimulus, and now everything has been given back. Company like Baidu, stimulus, and now everything has been coming back. Baba, stimulus, and now also everything's been coming back. So we might be able to get some decent premium here. If we continue falling, Baba is always on my list. 80 down to 75 is my sweet spot. If ever we get more declines, I would be interested in playing this one because I do think that eventually, guys, the fundamentals of this company will, the price will catch up with the fundamentals. The fundamentals are way too good for Baba to only be trading at a $87 price right now. At $80, the peg is under 1. Look at this free cash flow yield. Absolutely ridiculous for this company. So looking quite good there. And a few bigger plays we can look at as well is Tesla. I'm waiting for Tesla, guys. If Tesla has a bit of a red week this week, if all this data comes in bad, and Tesla comes down into here, let's say they come back down 315, 310, I'll be looking for short puts below our area of support, talking about 310 to 300. If we come down here, I'll be looking for maybe 285, 275 range to write some puts, maybe on a weekly or bi-weekly basis. Same concept for Microsoft. If Microsoft also comes down below into our support range right here, which is very clear, right? 405 down to 400. If we come down here and you guys have the capital to be playing a company like Microsoft, come down here to 410, you probably get the 405s or even the 400 strike for 1 week out, 2 weeks out, 3 weeks out. You can even play these on a longer dated basis. So all of those are the bonus plays, guys. I gave you guys a ton of plays. Hopefully it opens up a few ideas for you. And that's all I had for you today. So hopefully you enjoyed the video. If you did, consider dropping a like. Would appreciate it for the growth of the channel. Also consider subscribing if you're new, guys. Would love to have you back. We do these top fives every single Sunday night in preparation for the upcoming week. So hopefully I see you back soon. And lastly, if you have any questions on the strategy, guys, please feel free to leave them down below in the comment section, and I will usually answer you within the first 24 hours. And lastly, if you guys want to have access to all of these juicy trades that we made, here is the last week in terms of the wheels and the directional trades and earnings trades as well. If you guys want to have access to all of my trades in real time, not only for selling puts, but we also do a bunch of call options, leap call options, call debit spreads, share swing trades. There's something for everybody in there. If you want access to all these live trades, well, the link to the Discord is down below. Coupon code for Black Friday is Friday in all caps for a 30% off for your first month if ever you wanted to try out the service. You also get the private morning live streams every Monday to Friday for about the first hour, 2 hours of the market open, private videos, and chat with me all day and ask me your questions on your stocks and your option plays. So thanks for listening, guys. Once again, always a pleasure. Take care, and I'll see you tomorrow after the close. Peace.